As Christina mentions, one last look at the grain and livestock trade on a very busy day with all the numbers from USDA and numbers this morning. Real quick, we have the overnight. Don't want to lose track of the overnight export sales. This is all a part, not part of, the USDA report and the weekly export sales numbers. These came in early this morning. Corn sales, two of them, 110,000 tons to Japan, and another even larger sale, double that, 253,000 plus of corn to unknown destinations, both for this current marketing year. And then we had all the numbers at 11 o'clock Chicago time. OliverSloup joining us from iiTrader live on the floor at the CME Group, and talk about your I guess the trade reaction is pretty obvious with the corn a bit lower and soybeans stronger from those numbers.
Yeah, corn a little bit lower, but you can see my bias today. I've got the pom-poms out. We're trying to make corn great again. And although they are kind of the dud between corn, soybeans, and wheat, I do think that we're starting to find at least kind of a near-term floor in this market. Looking at the March contract, we're looking for support to hold between 351 and 353. That's psychologically significant above that 350 level, as well as the 100-day moving average. I want to see prices sustained above that. If we do get a conviction close below, that could lead to some accelerated selling pressure towards 345, which is the bottom of the range going back to October. But I mean, really, corn just seems to be trying to find its identity over the past several weeks, and it's really just stuck in a range waiting to break out or break down. But as it stands right now, I think this pullback is a good buying opportunity for the intermediate term. And our folks on Sirius XM, channel 147 on Rural Radio, can't see that you're wearing a corn tie here today. So you are a cheerleader for the corn trade. I like that tie, by the way, Oliver. But soybeans here, double-digit advance here. I guess it has to come from the stocks figure. Am I correct in that? Yeah, the soybeans, I think, outperforming a lot of people's expectations, and I think they're getting a lot of strength just from the fact that the report wasn't bearish. It wasn't necessarily bullish, but the fact that it wasn't overly bearish, I think, has got some buyers stepping into the market. We are coming up to key technical resistance. 1036 is a 50% retracement for that March contract. I would be a seller up there looking for a pullback towards 1012, and at that point, I think you'll find the market kind of stabilized. But again, looking fairly favorable today. If they are able to get some more buying into the market as we round out the week, that could put the chart formation from bearish to more bullish here going forward.
Well, they did take 48 million bushels off of the ending stocks number. I mean, that was a big jump or big decline, I would think, from 1 month to the next. But talk about wheat. Wheat was stronger going into the report, stronger this week, and adding a few more cents here today.
Yeah, we were very strong, bumped up right against the November highs at 430 for that March contract, but weren't able to get any follow-through momentum above that. I still like wheat on a longer-term basis. I think we break through that 430 high, and that'll open the door towards 445 and 3/4, which is the October highs. The funds are still relatively decent size net short players, so if we do get a close above technical resistance, I'm looking for them to cover, and the way they're going to do that is buy back futures, and I think that presents a good risk-reward opportunity to the upside. Obviously, a lot of other catalysts in play. One of them, or one of the most important one, being the U.S. dollar, which has had a lot of volatility recently. You're going to want to keep a very close eye on that for not just wheat, but also corn and soybeans as well.
Yeah, dollar coming back toward par value here at 101.25 right now on the March contract. So we're higher by near as by 8 cents in the wheat trade in Kansas City, by the way. Oliver, we'll take a break. We'll come back and we'll check the livestock trade with you, livestock producers and users in the livestock complex. Interested in all those numbers as well. We'll see how the trade reacts and how Oliver is reacting after this. Welcome back to Market Day Report. We are 10 minutes to the top of the hour. One last look at the livestock trade. Let's go back to Chicago. Live from the floor at the CME Group is OliverSloup from iiTrader. The livestock complex here. A lot of pressure in the cattle and the feeder cattle today. Is that a result of these numbers or is something that we're not seeing?
I think we're just seeing some long liquidation. The cattle market has had a nice run really over the past several months. We saw yesterday we kind of made some new highs, pulled back, and we're seeing some follow through with that pullback here today. And I think this presents actually an opportunity to the buy side. As we talked about earlier in the week and over the past couple of weeks, the charts are relatively constructive for both the live cattle and feeder cattle, probably more so the fats than the feeders. We have been making higher highs and higher lows, which is very technically significant and very promising going forward. So we're looking at a couple key levels for that February contract. 116.12 is the 20-day moving average. That's continued to hold pretty well on a closing basis, and as long as that holds on a closing basis, I think we can go retest those March highs, which come in about 122 3/4. So I think that the charts are constructive here in the near term. I think 122 probably be the top end of the range where you see some selling come into the market.
Very good. And we are at 117, so we're a long way from there now. On the February live cattle, down over $2 today right now, $2.12 lower to be exact. One last look, putting February at 117. April down right at $2 now, 115.90. Feeder cattle, and then we'll get to the hog complex and Oliver's comments in the pork trade. We are lower by over $2 in feeders as well. January 129.70, so below the 130 level. And the March feeders, most of the volume there, 127.40 is down over $2 as well. Hog trade, looking at all that pressure, lean hogs still higher. What do you make of February higher while $2 lower cattle and feeder cattle, Oliver?
Yeah, well, the February lean hogs has been very volatile. We talked, I believe it was Monday, we talked about 62.5, 66 being the range. Now we're right up here, 66 going into the close. It looks like we might be finally able to break out above that range. It's going to be very scrutinized on a closing basis. If we're able to get out above that, I think we could go up towards that 70 level. At that point, I think we start to top out and you see some sellers step back in. But as with the live cattle and feeder cattle, the chart is constructive. We have been making higher highs and higher lows, but most recently consolidating in that range. And now being at the top end of the range, you might be wise to take a little risk off the table, but I think we've been up here enough times where we're ready to break out.
Very good. All right. And well, so as your producer, before we let you go, if you're a producer out there looking ahead to the marketings late in the first quarter here, what would be a strategy you might offer?
I think there's a lot of opportunities in the options market. I think that's the best way to play, minimize your risk, as well as kind of open the door for profit potential without boxing yourself in. iiTrader, a good place to go to learn more as well. Oliver, thanks for your time now, and we look forward to our visit tonight in our evening news. Thank you. Looking forward to it.
OliverSloup live from Chicago. Again, here are the numbers one last time as we close things out. Live cattle futures lower, February down now just short of $2, $1.90 lower. Feeder cattle lower as well. The January down 205. March, the heavily traded contract for feeders down $2.10. And our hog futures at this moment are higher. February now to 66.05, only less than 20 points from their high of the day. Right now, February at 66.05 is up 45. April up 10. So interesting that the lean hogs continue higher with all the pressure in the cattle.
All right. Thank you very much.
Sure,
Mark.
you bet.